What's going on, everyone? The market showed so much strength today that we gapped up above multiple layers of resistance. We're gonna go over the stock market, we're gonna go over the crypto market, we're gonna go over the extreme moves in the 10-year yield as well as the dollar. Thank you guys so much for all of your likes, your comments, your subscribes. I really appreciate it, and I promise for this video I won't be screaming. All right, so let's start the video. All right, so remember how I was talking about yesterday, the fact that we closed right below this blue trend line. We failed to cross above 439. Well, today in the morning, the SPY just decided to gap up above both levels of resistance, and we ended up closing above our very important level back here, the orange trend line from a few days ago at 442.71. All right, and of course you can see that it had trouble. We tapped right at the 23.6% fib level back at 444.76. So now that is the new level of resistance. So now if we make new Fibonacci levels for the short term, right? You can see that currently we closed above the 50% fib level, right? So that is going to be the best, most plausible layer of support. You can also see that it coincides with September 17th close, right? So that is going to be a very important level of support. A very important level of resistance to the upside is literally the 618% fib level and the 23.6% fib level, literally 30 cents away from each other at 444.70. Okay, so that whole area right here, very important for us to cross above and close above. Okay, then once we start to consolidate and hold above this level and hold above the 444.76 level, we can cross up and then retest new all-time highs on the SPY. One other thing to take into consideration is that the SPY is in currently a bear flag still, right? The only thing that will essentially invalidate that bear flag, the two main things will be a close above the 618% fib level or a close above the 786% fib level. If we can close above 444.43, that will be a very high likely chance that we will continue going on higher. But if we fail at this level, right, and we begin to fall back down, that will be very bad. But essentially this whole sharp move to the upside tells me that China is not going to allow Evergrande to liquidate, because that would be detrimental to the entire international markets, and there's just too much money in the system currently for us to break due to something that can be solved with some more money. But of course, we do have to take it one day at a time. We can see that the MACD on the SPY is still crossing up above, which is very bullish, which means that there's still more room to the upside. The RSI is not yet overbought as well. If we can close above this 444.70 level, that would be amazing, and it would really point to a clear direction in the market. Okay, currently right now we're sitting at very major resistance. But today's move was very bullish, but now we have to see if we start to consolidate a bit at this level of resistance, come back down to these levels of support down here at 441.50, and then make another move to the upside. Okay, that would essentially make a bull flag, and then a break upward of that bull flag would be continuously very bullish. So we need to see if that will happen in the future moving forward. All right, there's my analysis on the SPY. Now let's go ahead and take a look at the IWM. All right, so the IWM is my favorite indice because it does move the most. You can see today the IWM moved 1.77%, the NASDAQ moved 0.92%, and the SPY moved 1.22%. So trading the IWM is great because you make the most gains. So currently you can see the IWM is outperforming the other two indices. The MACD crossed above the yellow signal line, right, which is very bullish, which is a bullish crossover, right? And essentially we are now at this very important level of resistance at 225.32. But the fact that we closed above 224.11 is very bullish, and now essentially very similar to the SPY. I wouldn't be surprised if we did come back down to this 222.50 level, and consolidate even a bit over here, that's completely normal, because especially after a huge move like this, consolidating for a few days would be normal, and then a continued move to the upside would be safe and rational. But of course, we can still continue to see extreme strength. The RSI is not yet overbought. The MACD just crossed over, so there's tons of room to the upside. But once again, you want to wait to see and get a very clear picture before you go into turning swing trades. Right now, if we didn't, sell everything earlier, right, we would be able to continue to take profits as we continued on higher. But if you tried to buy into swing trades up here, this is not a good risk reward opportunity. It would have been much better to buy down here and hold, right? Or where you would have a much better risk reward trade and cover your losses to the downside, right? So now we have to take a look at something else. So here you can see that the IWM closed above the 618% fib level, which is basically a very, very strong indication that this bear flag formation has been broken and we are bouncing to the upside, and we broke to the upside. So obviously it's showing much more strength in the SPY, right? And if we close above 226.50, that will be an end to the discussion of this being an opportunity for people to get into shorts and then bring it down lower. If we close above this level, then it is clear we see strength in the market in a specific direction, okay, period. So we need to see if we close above that level. That is going to be the next key level of resistance for us on the IWM. So now here, if you zoom out on a chart of the IWM, right, you can see that for the entire year, essentially, we've just been consolidating in this large triangle. All right, so if we can start to close above these highs here at 235, that could potentially set us up for a huge move to the upside, something that we were not expecting at all. Okay, this is a huge bull flag formation. Okay, and now if the 10-year yield starts to show way more strength than the 30-year yield, an upward huge strong move on the IWM is very, very possible and likely even. So there's my analysis on the IWM. Let's go ahead and take a look at the NASDAQ. So the NASDAQ clearly underperforming compared to the SPY and the IWM, especially. The NASDAQ failed to close above 374, but it did fill this gap. We showed extreme strength as well today in the NASDAQ. The MACD has not yet even crossed above, which is very, very bullish. The RSI also is not as overextended as the IWM is, which means that there's still a lot more room to go to the upside on the NASDAQ. But if the 30-year yield continues to show massive weakness compared to the 10-year yield, then the IWM will continue to be the leading indice. And it might be, short-lived, but in the short term, especially as the 10-year yield bounces from its extreme lows, the NASDAQ might just continue showing less strength than it did this prior a year and a half, right? So we need to see if we can close above that level. You can see that level also basically coincides with the 618% fib level, which is very important. As I've been saying, a close above that level can really determine whether or not this is going to be an upward move and a bounce. All right. Overall, the move today on the equities was extremely strong, but now we need to take a look at the 30-year yield, the 10-year yield, and the dollar. All right, now here is the 30-year yield. So if the 30-year yield goes down like this, then it is not bullish at all for the NASDAQ. So we can see that it looks like it's going to close below very key level of support here, and we're now sitting at a very key level of support currently. And this move is not bullish at all for the NASDAQ, which is another reason why the NASDAQ was not the leading indice today. So now, I mean, you can see that the MACD is still hasn't even crossed down below yet, but we made such a huge move to the downside, which means there is a lot more room to the downside. The RSI is not even yet oversold yet. So we need to see now if the 30-year yield can hold above 161.2. if it starts to close below that level, then definitely the NASDAQ will be the underperformer. And if the overall market is bearish, then the NASDAQ will be the biggest loser, most likely. Especially if the 30-year yield shows this much weakness. All right. There's the analysis on the 30-year yield. But now to see why the IWM did so well, we have to take a look at the 10-year yield. So the 10-year yield is showing tons of strength. We're looking to break above this bull flag formation that we've been forming. Very similar to, remember, zooming out of the IWM, just a big bull flag formation, but we created one on a much shorter scale here in the 10-year yield, and it looks like we're going to close above that, which is very, very, very bullish. That's exactly why the IWM did the best. There's still tons of more room to the upside, and overall, it looks like the IWM is going to take the lead in terms of bringing the market either up or down currently because of the market environment that we're in. All right. Now let's go ahead and take a look at the dollar. So the dollar didn't do that well today because the overall equities market did fantastic. But you can see that there's still tons of more room to the downside. The MACD is not yet crossed down below. It looks much worse than the it looks much worse than the 10-year yield. Before, it looked very similar to the 30-year yield in that the MACD was up here, right? But the 30-year yield today showed so much weakness that it became even worse than the dollar. So in terms of the pairing that was going on, right? Because if the 30-year yield and the dollar both do badly, then the NASDAQ does not do well. Okay, but because the IWM and the 10-year yield were showing so much strength, and the markets were showing so much strength, and because the Chinese markets bounced as well, all of those things went into consideration, and that's why the overall equities market bounced. But if the dollar continues to fall, and the 30-year yield continue to fall, then that is not going to be good for the NASDAQ. All right. But yeah, I mean, overall, as long as the 10-year yield is doing well, then that should be good for the IWM, okay? I don't want to confuse you guys too much, talk about this too much. There's the analysis on the equities market. Now let's go ahead and take a look at crypto. I'm going to make this very short. So, number one, the fact that we saw a close above this very, very important trend line that we've been monitoring and checking for so long. I'm going to show you guys again here. When you put this green trend line here, when you put it on the log chart, it was acting as support and an uptrend, and then when it broke down below, that level was the candle from 41,000 down to 29,000. Okay, but now when you take that chart and look at the trend line and take it out of log chart, it becomes a very major level of resistance as well as support. And then essentially, once we finally closed above that level, you can see here, we started to break above, and then we came back down to retest this area. And then we started to really break up above, and then we crossed down below, and that signaled a very strong major move to the bottom. But we reversed, and then yesterday we ended up closing above this trend line, okay? So as soon as we closed above that trend line, that was very, very bullish. So which is exactly why Bitcoin bounced so heavily, because we closed in a very bullish manner above a very important trend line. Okay, now looking at the technicals, Bitcoin's MACD has not even begin to even look like it's about to cross above yet. The RSI still have tons of room to the upside. And another thing we should check out now is Ethereum. So Ethereum obviously looks very similar in terms of the MACD. Still tons of room to the upside. Ethereum also closed above yesterday's entire candle, which is very bullish. And it looks like today it can close above the highs from a few days ago, which will also be very bullish. And as long as Bitcoin is doing this well, Ethereum should be able to follow. And you can see that currently Bitcoin is leading Ethereum in terms of the bounce. Okay, so there's my overall analysis on the crypto market. There's my analysis on the stock market. I really hope you guys enjoyed all of my content. I'm really happy I can help everyone with everything that I'm doing here. And yeah, I really appreciate everyone's support. Thank you so much, and I will see you guys tomorrow. Thank you. Bye.